Right, just a couple highlights from today. It was a tricky day because the market gapped down. It seemed really obvious that everyone was thinking short, which always makes me hesitant to call a short. All right, and so for that reason, I kind of did a lot of sitting on hands early. I wanted to wait and see what the market was going to do. Let's get the drawing tool going here. I did call Broadcom after it did this little pop on this 5-minute candle pullback. Called it long there with a stop right below there. Whoops. Stop was right down below that candle. So on Broadcom it was 32.81 with a 15-cent stop, and it went to 33.17. So I mean, not a bad move, pretty good risk reward. And CarMax is another one. CarMax I called basically long right here over this little mini base. 26.12, stop only a dime below, and from 26.12 went to 26.50 here, and even a little higher later in the session. So a couple low risk trades. There were some others that are still experimenting with shorting, but as I told the members, today was probably not the day to do it because the market gapped down. Like I said, everybody expecting a short. So I'm going to say a few words before I get off here about what I call, because I gave a little speech to the chat room today about rogue, hard to say, rogue trading. When you take what I call a rogue trade, which means just jumping in something, and there I've typed that out there. Rogue trades are trades with that are impulsive with no clear trigger and stop. So that's all. I want to talk about that a little bit. Okay, so if you're trading and you want to trade every day, and I was really talking to somebody who private messaged me that's struggling a little bit. You need to cut the rogue trades out. All right, the impulsive trades with no clear trigger and stop. You get rid of those, you'd be way ahead of the game right off the bat. All right. Here's the thing: if you take a rogue trade, all right, and you make, let's say you make $400. You took it really big, and it got a nice quick move, and you're out. You made $400. That $400 really means absolutely nothing, because all you've done is teach yourself that you can take rogue trades or impulsive trades. That's easier word to say. Impulsive trades, and get away with it and make money. When down the road, your impulsive trades are going to take that $400 back plus a lot more. So if you can trade with the patience to wait for setups that you know work or proven themselves in the past, and then you got a clearly defined trigger and stop, and you can further manage risk with position size, you're going to be way ahead of the game. So if nothing else, ask yourself before you ever take a trade, does this meet one of my predefined setups? If you can't answer yes to that, pass on the trade. Again, the money that you get from an impulsive trade, even if it works, means absolutely nothing unless you just need some money for dinner that night and you're desperate. Okay, then you can say, yay, I got some money. Otherwise, if you're wanting to trade with some longevity, like I assume most people that trade are wanting, get rid of those impulsive trades. Get rid of them, because a little short-term gain means absolutely nothing. All right, and it'll cost you more down the road. That's my little lecture for the day. I'm not going to babble any further. I'm looking forward to the rest of the week to see what the macro picture brings us. But in the meantime, I'm pretty sure we'll have plenty of setups as the days unfold. So, all right, we'll talk to you later.